You're listening to the Creative Capital Podcast. You're dying to learn about how you can create wealth through real estate investing? Then you come to the right place. Join in every week as we go over the ins and outs of real estate investing and learn how you too can become financially free. What's going on, everybody? This is Josh Ferrari, host of the Creative Capital Podcast. Guys, we have got a great show in store for you today. Our guest today is a Mr. Jeremy Hands. Jeremy Hands is a husband, dad, and multifamily syndicator from Pensacola, Florida. He's a former active duty and now Navy reservist advanced flight instructor. He's a real estate investor focused on value add and distressed family and mobile home park deals on the Gulf Coast. His first deal was a fourplex that he house hacked in San Diego, California in 2010. Since then, he's active and passively invested in over 1,000 units. He's syndicated and managed 4 deals and bought several more as partnerships. Today, he's a managing partner of Climb Capital, a commercial real estate investment company focused on restoring distressed workforce housing deals on the Gulf Coast. Originally from Allen, Texas, married for 12 years with 3 kids, he's also a deacon at Olive Baptist Church and teaches personal finance classes. If he has any time left, he enjoys barbecuing on his big green egg, reading, and spending time at the lake. Guys, this podcast right here is filled with tons of juicy details. We go over capital preservation and everything from how to position your assets moving forward with everything going on in the economic impact of this horrible coronavirus. We go over how do you help tenants pay rent? How are we handling collections? What are we seeing the market doing moving forward? What should we be doing now to properly position ourselves to buy in the future? Are we even entering into a buyer's market? Guys, we go over tons of great stuff. So without further ado, let's bring on our guest. Hey, Jeremy, welcome to the show. It's good to have you on.
Thanks for having me.
So tell us a little bit about yourself. How'd you get started in the real estate space?
So my real estate started back in really about 2007, 2008. Young military officer, left college, had no need for any money, had everything paid for, but decided to take some loans in 2008 to invest in the stock market. You may have heard about 2008, 2009. I'm not good as a stock market investor. I turned $55,000 of loaned money into $15,000. Had a $1,000 a month loan payment to pay for the next 4 or 5 years with nothing to show for it. I realized there had to be a better way. And so that kind of started me down the real estate path, trying to learn more. At the time, I was stationed in San Diego, California, bought a fourplex out there at the bottom of the San Diego market in 2010.
Okay.
Still way more money than I ever thought possible. House hacked that before house hacking was a thing. And then moved off from San Diego, and they moved me to Pensacola, Florida in 2013, and ended up renting the whole thing out and then selling it a few years later. And that kind of started my process. And when I moved to Pensacola, I continued to rent out here and actually ended up buying some commercial deals before I ever bought my own house. And so from there, just kind of slowly built myself up to doing deals now, 50 units plus. And quite honestly, still feel like I got a long ways to go. Not nearly the biggest cat in the yard fighting right now.
Yeah. So I know you've done over 1,000 units, both actively and passively. So starting out with a fourplex, what made you want to go into like 50, like multiple units?
So I'm not very good at a lot of things. So I learned pretty quickly with the fourplex. At the time I was in the Navy, I was deployed most of that time in San Diego. And so I had a property manager. So even though I lived on the property, I never did any property management. I quickly learned that having other people do the work was what I was looking for. And so the more units I could buy, I fundamentally understood I could hire people to help me with the things I was bad at, right? And so I went from that fourplex and I decided mobile home parks would probably be my next kind of stop. And so I did some training on mobile home parks, spent a lot of time kind of thinking around, trying to find some of those. Eventually found a partner trying to buy the same mobile home park. We ended up partnering up, realizing that we had too much in common. And from there, just kind of continue to expand through the apartments and really the mobile home park space.
That's awesome.
Yeah.
So this particular episode is primarily about capital preservation. Mm-hmm. So in light of everything going on with the economy and COVID-19, how are you positioning your current assets to withstand the economic impact?
I think there'd be hubris to say that you know what's going to happen in the future, right? And so
Yeah.
I don't think that you can prepare for the boogie monster, right? And so I don't know how bad this is going to get, right? I fear that if it continues and there's people stay out of work for a longer amount of time, there'll be an inability to pay rent, right? However, I kind of got started in this game, I feel a little bit late for the apartment cycle, right? So my first passive investments really started in 2015, 2016. My first syndication was in 2015, really at the end of 2015. And so at that time already, the apartment space had kind of been running its way up from kind of the bottoms of 2011 to 2012. And so at the time, I didn't know how long it was going to continue to run. If I had known then what I know now, I would have bought everything I could get my hands on. But I immediately kind of thought, hey, in the event of a recession, what should I be buying, right? And so for me, that's always meant kind of workforce housing. I like buying a property where if I tried to rebuild the thing, it would cost me double or triple from what I'm paying for it, right? And so in some respects, I'm already kind of set up for this, and that I think I'm buying properties and I'm running properties in a way that I'm going to be able to provide a service for that person who's working that can pay me rent. That's all fine and dandy, right? Until everybody's out of work.
Yeah.
So I think right now the kicker is you kind of have to assume that since we're all in this together, there's going to be some help from the government when it comes to stimulus, unemployment. In fact, I know for a lot of my tenants, they'll be making more money per week and per month on unemployment than they are currently or were currently at their jobs.
Wow.
And so as a workforce housing guy, it's kind of the C to C minus space. As long as there's any money flowing into those people, right? There's nowhere else they can move. They can't move down, right? We have clean, safe, affordable, functional housing. But once you leave our space, anything lower than kind of our price point, you're losing something, if not all of those kind of the facets, right? And so we're going to see some issues, right? Some things we're doing is we're going to slow down some of our CapEx, stop our CapEx. We're going to hold cash. We're going to run things a lot leaner. Honestly, we're going to be more worried about safety and health of our employees and our tenants, because the thing that would really kill us is if we couldn't have anybody on property because we had all kinds of, something shut down for people getting sick. So number one is just, don't make things worse and just don't lose. And if we're losing, lose the same amount as everybody else because we're all in it together, right? So the banks are in the same spot we're in, the tenants are in the same spot we're in. I think our biggest success we've been able to complete with so far is just communicating to our tenants, hey, here's where things are at. Here's the expectations. Yes, we may not be able to evict you right now, but if you do not pay us, you cannot live here for free forever, right? And so, hey, if you're going through a job loss, talk to us. We want to communicate. Let's start a plan. Let's figure something out before, not be surprised after, right? And so we've been trying to be very proactive on just information about what's going on, who can work and who can't, and then just generally kind of our rent plan and expectations going forward. So I'd say those are kind of my big ones, right? Trying to be well positioned in the market in general, communicate, and then hold cash where you can. There's nobody's getting any extras right now. The amenities are turned off. We're not sprucing anything up. Anything that can be cut is going to be cut. And that's just kind of the nature.
So you mentioned unemployment, and I think unemployment's like $800 some odd a week right now. So
yeah, unemployment it's going to depend on states. So each state's a little bit different. They have a weekly payout, and then right now with the CARES Act, it's actually adding a $600 a month or a week, stipend on top of that. So unemployment just got really juicy for some people who've been on unemployment before in comparison.
Do you think that's going to want to make more people not work? And will that eventually affect collections moving forward? Or when the stimulus extra 600 stops, will they then go back to work?
I think that's a question we don't know, right? It depends on how long this goes on.
Yeah.
I think we have fundamentally changed some things in our country that may not be good, right? I think the fact that we've kind of given up some civil liberties without really even thinking about it, it's probably not a good thing. And I think the other thing is we're kind of telescoping to a lot of people that the government's going to help you out, right? So I'm not going to say that's wrong, but I do fear that when this thing does finally clear, and however long it takes to whatever we say clear is, we're going to have a problem with people trying not to go back to work or not wanting to go back to work or taking a pay cut to go back to work, right? Which is also problematic. So there's going to be some pressure, I think, on especially kind of the working class jobs to find a place. Now, I will say, right, we had record unemployment until recently. And so this is definitely going to change that spectrum. There's definitely some people that aren't going to be able to make it through this business-wise. If you were on the edge before coronavirus, even if the government, bails you out, it's never going to be enough, right? And so there's going to be some things that aren't going to reopen. So maybe the pool of available help will be bigger, and so maybe we can kind of continue to fish for good employees a little bit harder than we've been able to in the past. I think when this is all done, unemployment's up. There's a possibility that some people are going to have real heartache going back to work or finding a job that is comparable with what they had in the past.
Man, so you mentioned tenants paying rent, and you're kind of trying to help them pay rent, but then also the stimulus bill and unemployment is helping people pay rent. So are you having to do anything on the forefront on your end to incentivize people to pay rent, especially with everything going on with evictions not being able to take place, late payments not being able to take place?
If I could have rewrote my plan over the last 3 weeks, probably middle of March, I would have put out some kind of incentive to paying rent on time. The truth is, I'm kind of in a space, the properties that we own, we're going to fight for our rent all month long. We don't have 100% payment on, the third of the month kind of deal. If I can incentivize people to pay, right, that's good. Giving the carrot's a lot better than the stick. And we're trying, in general, these properties I've bought have typically been run down, not taken care of, poor management or no management. And so our play all along is to fix the problems, right, to run them like a business, and then to actually treat these people and provide some amenities that they didn't expect for their price point, right? And so, not being the slumlord that's knocking on the door demanding rent is one of the things. Now, we expect you to pay. We're going to make that very clear. But we're going to communicate that in a business relationship, not knocking on the door with a baseball bat. So incentivizing was probably would have been a good plan. I honestly don't think for us we've not had as big of an issue on the majority of our properties. We had one property that's pretty severely hurt right now from people out of work. That generally is not a problem, but everybody else, for the beginning of April, we've had decent pay rates in comparison to expectations. May, I think, will be a bigger question, especially if the stimulus checks don't start coming in as quickly as maybe we'd hoped.
So on a percentage basis, on average, for your units that you own, how much would you say collections have varied just in the month of April?
I mean, from property to property, it's kind of all over the place. For one of my 42-unit properties, I think it's probably zero is variation. For a 16-unit mobile home park, kind of on the lower side, it's probably 100% variation, quite honestly. So I'm all over the place. I'd say in general, I think we're probably pretty close holistically, across the entire portfolio of about the national average, probably about 20 to 30%.
Man.
So we're paying for the front of the month.
Okay, so where do you see this taking cap rates in the future? Like, do you see this changing a whole 1% to 2%, or are we seeing maybe a 0.5%, 0.75%?
So I don't know, right? It depends on who you are in the space, right? It's going to depend on how you're going to answer this question. If you ask a broker, they're going to tell you there's going to be no problems, right? The cap rates are going to stay the same. Everyone's going to rush money into these deals, right? Everything's super rosy. If you talk to a lender, you get kind of a mixed message because they're like, yeah, we're still lending. Oh, but by the way, we need 18 months of reserves and just some crazy changes in terms. Their basis spread is getting significantly higher off of their rates. I don't think we're going to know, but I think expectation for me is that cap rates will move, but probably not as aggressively or as high as maybe some might expect. I don't really think as an investor myself, there's a lot of places I can get a better return than in commercial real estate. And so if that's the case, what's your alternative, right? And if there's not better alternatives, right? If I still don't believe in the stock market as an alternative, definitely don't trust the bond market. What am I going to look at? I'm looking at hard assets. And for me, I think that's going to be back to commercial real estate. And so there's going to be pressure, I think, on those cap rates to remain about where they're at because the deals are still the deals, right? And if you can force appreciation the cap rate doesn't matter, right? So I don't really care about cap rates when I buy, because I'm buying something that's broken where the cap rate doesn't make sense because maybe it doesn't even make money. But I know based on a process of turning things around that it'll be a stabilized property that makes cash flow on the backside. So really, the only thing that affects me in my business model is really that sales price at the end. And quite honestly, I can kind of wait it out a little bit if I need to. And as long as it's making money, my investors are happy. We don't necessarily have to get rid of it right away.
Yeah, that is exciting. So do you think it'll be easier or more difficult to acquire multifamily moving forward? Like, are we going into a buyer's market, or is it going to stay a seller's market? Is there going to be a lot of fluctuation, just a little bit?
So, the one thing I think from investor sentiment that I hear and I see in the groups that I run with, people always joke that, I can't believe you're buying apartments, blah, blah, blah. I'm like, everybody I know buys apartments, right? So the people I run with is maybe not the same set as the average American. So maybe it's not fair how I think through this stuff. But, my feeling is that we're going to see some changes, but we're going to see changes based on the psychology of people thinking they can get a deal, right? And so everybody's waiting for the time when the buying is going to be really good. That assumes some things that I don't know if we actually found, right? So the buying assumes that people are going to have some distress and they're going to want to sell these properties, because they have to get rid of them or they just want to get out of them. There's nothing that's made that happen though, right? The only thing that's changed is people aren't paying the rent, but nobody's paying the rent. Nobody's working. And so at some point that cleans back up. Once we get back to whatever new normal is, right? I don't think if I own an asset, especially with fixed rate debt, that I want to get rid of it. So I don't see this becoming a great buyer's market anytime in the short term, until another asset class has some room to run and people might want to run their money there instead. I think you're going to see some pretty good competition for commercial real estate, specifically multifamily.
So speaking of different asset classes, which do you find to be better, at least right now? Do you find apartments to be better or mobile home parks?
What do you consider better?
I guess solid returns. I mean, with everything going on with collections, that's a hard chip to chew.
Right. So, I mean, again, my plan for any deal is to buy something that's broken and fix it. So I'm going to make more total return probably on an apartment complex I can sell on a stabilized deal to somebody else and be able to sell it or to be able to buy it with fixed rate, agency debt. The cash flow during that time frame of the turnaround may not be as strong as a mobile home park, right? So long-term play, I still think apartments probably have a better return number, but short-term and just pure cash flow month to month from week one or month one, probably mobile home park. Assuming you're buying the right mobile home park. And I will say that that's another space that, I've seen probably the price per pad increase by about 3 times in just the last 3 or 4 years. Since buying my first mobile home park here in 2015.
Do you think it's going to continue to increase?
Yeah, I do. I think what people are searching for is a rate of return. And so, I used to say mobile home park and people would do this, right? And they get a little crease across the top of their nose. And every time I saw that crease across the top of the nose, somebody, basically lifting their nose and saying they're too good for mobile home park. I was like, hey, that's another cap rate. Well, now when I say mobile home park, people are like, oh, that's interesting, right? And so there's a lot more money, I think, getting into the space. I think a lot of the owners, maybe 10 or 15 years ago were still mom and pops who had started the place, 30, 40 years ago. They're selling off now to bigger players, even like myself. And so it's becoming a little bit more sophisticated, and therefore the returns are dropping pretty precipitously. I see stuff all the time, park-owned homes and lot rent combined, and they're still trying to sell it on an 8 cap, right? I would have laughed at that 3 or 4 years ago, and that seems to be where things are starting to at least start the trading now. So it's getting tighter for sure.
Wow, didn't mobile home parks used to be around 11, 12 caps? Now they're down to 8?
Oh, and it depends on the park, right? So the bigger the size, the easier the financing, the more desirable, the lower the cap rate, right? Can you still buy 12% cap rate deals? Yeah, but they probably have dirt roads and you're going to have to do a lot of the work yourself, and there's probably no real expenses or income that they can verify, and you're buying what you're buying. So mobile home park has a huge variance of what you're actually buying based on size, location, quality, so on and so forth.
Okay. So based on everything you've said thus far, what should we be doing now, us as investors, be doing to properly position ourselves for what the market has to offer moving forward?
So I was talking to some other guys this week about this. I feel like as a real estate investor, we're really going to make money by being able to work inside of a system. And we're going to be able to figure out the rules and know the rules a little bit better and play those rules so that we can kind of make money by providing a good product. Well, if the rules change, right, the structural rules change, the regulatory rules change, we're going to have to adapt to that. So I think the ability to adapt to a changing climate is going to be one thing that's going to have to be very important. And I think generally just good operations, right? You got to know your numbers. You got to know your people. We're going to find out, I think, over the next couple of years, who is a good operator and who was good at buying at the right time. Because I think you could have bought anything between 2011 and 2014, and you look like you're a bazillionaire and super smart because cap rates have just compressed so much over the last couple of years. But now we're really going to see, hey, who knows how to operate and who just got lucky. And so now the work begins.
Okay, so you mentioned operations and the passive investor and the operator. So speaking of all of that, how will we be able to tell the difference between a good operator and a bad operator in this particular economy?
Yeah, I think that's a valid question. I think a good things that you're going to look for a good operator are going to be track record of success, a team, and a repeatable and explainable process of how they're going to be able to make your money. Right? When you're looking at a deal, especially as a passive investor, you have to have some understanding of how to underwrite that deal, so you can kind of see what are the assumptions that operators are making, and are those things that are true, right? And so if they're going to assume that they're going to be able to raise rents by 5% every year, year over year, that's not likely, right? Maybe the last 5 to 7 years that could have happened, but going forward, I think we're going to see wages stagnate slightly, right? If they're going to expect that this deal that they're buying at a 6 or 6.5 cap is still going to be a 6 or 6.5 cap 5 or 10 years after they buy, and there's going to be no growth or any kind of increase in the basis points further, then I think that that's probably a poor assumption, right? And so those two things kind of on the underwriting perspective. And then from the operation side is how do they operate? Like what do they do? Do they just turn it over to somebody and kind of hope and pray? Are they on the ground there? Are they able to see the asset? Do they have a plan for what are they going to do to actually increase the value or increase the tenant base or maintain, if you're buying on market, what's already there as you're going forward, right? And being very specific about that, right? Who's going to be there? How many people are going to be there? How are they going to maintain expenses? What's their secret sauce? What are they doing that somebody else off the street can't do, or even worse, what somebody across the country can't do, who's just buying this stuff for some kind of small gain.
So what can a passive investor do now to properly preserve their capital moving forward in finding an operator and finding a deal to invest in, whether it be multifamily, single family, or whatever it is?
So I think for finding an operator, right, let's just separate out the rest of that question. You need somebody who is going to be super honest with you, right? Because you don't need to be lied to. You need somebody that's got a little bit of experience and knowledge and know-how, right? That's not necessarily the most important. I'd say honest is more important than that one. And then I'll be honest, the other thing you got to think about is what is that operator's actual financial situation? If they have a problem, right, can they loan the property? Can they loan something to the company to be able to kind of buoy over for a couple months, right? Or are they so tight themselves that the second this deal falls apart and they're not seeing any money made off it, they just run away? Sorry about that.
What kind of bug is it?
I live in a nice house. Looks like I got cockroaches. Anyways, so I think, looking at that operator, like, is that a person that you're going to be willing to kind of be in business with? Because that's really what they are, business partner, the next 5 to 10 years. And if something goes bad, how is that person going to be able to communicate that? And what are they going to do about it? Are they going to sit and sulk? Or are they going to go figure out a plan and solve it, right? And I think as a passive investor myself in other deals, it's very clear that there's different types of personalities. And I want a personality who's going to see a problem and go fix it, not somebody who's going to say, hey, woe is me, and kind of run away from it.
So as a passive investor yourself, in any deals that you're currently invested in right now, what are you seeing other operators do to help you and to let you know, hey, I'm doing this, this, and this, this is how we're trying to combat this. This is how I'm going to get you the return that I was trying to promise you.
The one thing that I found is becoming more important to me recently than I also do for my own investors is communication, right? And so where a quarterly communication might have been okay 5 or 6 years ago, I really want to hear monthly now, maybe even more honestly more often than that if something comes up about what's going on, what's the plan, how things are changing. Um, and then short of that, it's just, hey, is this the kind of person I get on the phone and call and ask a question? They can give me a worthwhile answer, or they can kind of, try to write me off and not answer the questions because they don't want to have hard conversations, right?
Yeah.
And I've had a few of those right with my own investors over the last few years, right? Things haven't always gone as perfectly as I'd like. But hey, here's the problem. Hey, here's the solution that I see. We're going to work towards it, and we're still going to look to make that return. So I think as long as you're keeping that investor, that fiduciary kind of responsibility of protecting their money over all else, that's kind of the best you can look for.
Okay. Would you say that being a passive investor has helped you become a better active investor?
Yeah. I mean, honestly, my passive investments haven't done nearly as well as my active ones from an actual total return and just from an investor return, right? But I think there is some good in the diversification of different markets, different people, different ideas. And then quite honestly, right, it's good to just see how other people communicate and how other people kind of tackle the same problems that I'm dealing with on a daily basis too. The other thing for me that's been really nice is, if I give you a handful of money and I've got a question, you're typically going to answer my phone call, right? So I now have a kind of a built-in group to network with when I have an issue for my own deal. They typically can get on the phone and answer that question, even if it has nothing to do about the deal necessarily we're doing together.
Okay. Hey, well, this has been awesome, man. I think I'm going to go ahead and transition into the last segment of the show called the Core Four. Mm-hmm. So first question is, what is your favorite real estate related book?
So I read a lot. I read about 70 books a year. And so real estate is not a topic that I'm necessarily reading all the time now. I'm going to give you two. The first one is real estate that kind of got me started. I don't necessarily know if it has any value today. I haven't reread it in probably 3 or 4 years. But the one that actually got me started, caught me to, hey, just go make the phone calls and believe this is real, is called Investing in Duplexes, Triplexes, and Quads by Larry Loftus. Kind of the small multifamily idea. That's what I got started with. I literally just said, hey, if I can do this, I'll be rich. And that got me down the road. And then the one more recently, right, that's more business oriented, the one that I'm using in my own business now is Traction by Gino Wickman. Kind of how you run a business, a small entrepreneurial business. How can you actually put some policies, procedures, how you can make this a thing and not just a side gig that I do on the weekends.
Yeah, I've read Traction. I love that book. I can't say I've heard of Investing in Duplexes, Triplexes, and Quads, though. How old is that book? Do you know?
It's got to be 15, 20 years old now. It was probably 5 to 10 years old when I read it back in 2010. So.
Okay. Next question.
Still applies, though. Still applies.
Oh, yeah. No, of course. What do you think your unique skill is that helped you become successful?
So I hear a lot of times people say, man, I want to be you someday. And I go, well, what's the difference between me and you, right? And I think the answer is you just got to be willing to take a little bit bigger risk. So I think it's the stick-to-itiveness and just to be willing to do it, right? And so the difference between a $100,000 house and $1 million apartment is an extra zero, right? And the hard parts about that are the learning the process, but the process is relatively the same between the two. One just has a bunch bigger numbers. So you got to be willing to take that bigger risk and then just be willing to go and do it.
Awesome. Okay, next question. Tell me something that's true about real estate that almost nobody agrees with you on.
I don't know if anybody, I won't say nobody agrees with me with this, but I don't think you need to be a wholesaler to start in real estate, right? So I think a lot of times you hear in real estate investment, right, you got to start at the bottom, you got to wholesale some deals, you got to flip some deals, you got to be a buy and hold single family guy, you got to burr something, then you go buy a 2 to 4 unit, right? And then from there you can slowly work your way up into being a multifamily guy, right? I've owned exactly one single family home. And this is one I live in right now, right? And I bought that after, right? I had bought multiple commercial deals, right? And so I really believe that if you want to get into multifamily, if you wanted to get into the commercial space, you can't be broke, you can't be dumb, you can't be stupid, right? And you can't have no time. But if you have some time, if you have some money, and you have a little bit of knowledge to it yourself, you can find a way to jump into the space, partnering up. Even if that starts on a passive deal, you don't need to start with answering late night phone calls about tenants if you don't want to, right? There's another way, right? I go to conferences. My favorite thing to do, you meet some of these like kind of high net worth people that come in, they're trying to do in real estate. You talk to them, they're doctors, lawyers, big business people. And they're telling you about how they're going to wholesale. And you're like, how are you ever going to beat a 22-year-old who's trying to wholesale? Like, you got a full-time job. You make hundreds of thousands of dollars a year. You need to leverage what you know into something right away, not try to go compete against somebody that you're never going to beat, because you're just not going to hustle as hard as someone who's broke. So
Yeah. Dude, that's great. I hear that all the time. Wholesale, yeah, it's a great, easy, risk-free way to get into real estate. So, last question. What one piece of advice would you give to our listeners wanting to succeed in real estate investing?
Ooh, I don't know. You got to start, right? You can't hit a home run if you never step up to the plate. So, I've been very blessed that I've had some pretty solid hits, maybe even a home run or two in my first couple of years here as a real estate investor. It's not guaranteed that everyone else will have the same, but you can never hit the grand slam or the home run if you never even step up, right? So you got to get started, and then believe long term that it's gonna work. But have a plan and execute on it. So,
all right, Jeremy, I got one last question. How can people get a hold of you?
So if you're interested in learning more about what I do, you want to talk, get on my list or any whatever else, glad to help. Either give me a call, 469-878-0422. Probably won't answer, but leave me a message. I'll get back to you. Or you can email me at jeremy@climbcapital.com, or you can go to climbcapital.com, follow the links there too, and get a hold of me there.
Good stuff, man. Hey, well, I appreciate you coming out and joining us on the show.
Absolutely.
Wow. Guys, that was absolutely phenomenal. What great wisdom Jeremy has. Having already invested in over 1,000 units, I'm sure you were able to get a ton out of this episode. I know I'll definitely be listening to this podcast again. Make sure you guys tune in next week for more great nuggets of wisdom. And just as a little recap, I wanted to let you guys know that there will be, this will be posted on the website. It'll also be posted on Spotify, Apple iTunes, Google Podcasts, and all those other hosting websites. So every Tuesday, don't forget, you can check that out. If you want to subscribe, you can go on any of those hosting websites and subscribe. If you just want to check us out, then we'll be on the website, or you can go check out our blogs, our newsletter, or any deals we have coming out. This has been awesome, guys. Until next time.